how to interpret operating working capital. So we understand what is operating working capital. Operating working capital is inventory plus trade receivables minus trade payables, and that is OWC. Now the question is, can you come to a conclusion about OWC based on the absolute number? So if our company has got X amount of OWC, can we say confidently that this is a good sign or this is a bad sign? Answer is no. OWC cannot be interpreted in isolation. OWC has to be interpreted in conjunction with the sales that we have. So what we need to do, we need to calculate a ratio, and that is operating working capital divided by sales. So we calculate the operating working capital ratio. Operating working capital ratio. And what is operating working capital ratio? Operating working capital ratio is OWC divided by sales. And then we get a number. Now, whether our OWC management of the current year is good or not good, how do we figure out? So if my operating working capital ratio of the current year is coming, let's say 20%, and last year it was 25%, is it a good sign or bad sign? It is a good sign. It is a good sign. That means what? That means today in the current year, I have been able to decrease my OWC ratio from 25% to 20%. That means for the same amount of sale, I have been able to manage a lower level of working capital. And remember, lower the working capital, better it is for the organization. Lower the working capital, better it is for the organization. So that is what we need to remember. How to interpret working capital or operating working capital? So for interpreting operating working capital, whether it is good or it is not good, what we need to do, we need to calculate a ratio which is operating working capital ratio. How do we calculate operating working capital ratio? We will calculate the operating working capital ratio by dividing the operating working capital by the amount of sales that we have got in that year, and then compare this number with the number of the last year. That is one way we can do. Number two, what we can do, we can compare our operating working capital ratio with our competitor. So if our operating working capital ratio is lower than our competitor, that means we are doing better. Number three, what we can do, we can compare our operating working capital ratio with our budgeted figure. So at the beginning of the year, we make budget, and in that budget, we also calculate operating working capital ratio for the year 2022. So at the end of the year, we also compare our operating working capital ratio actual with the budgeted ratio. So if our budgeted ratio was 15% and our actual ratio is 10%, that means we have done better in our operating working capital management. If it is vice versa, that means our working capital management has not been as good as we had budgeted or expected. So this is how, friends, we would interpret the operating working capital ratio. How to calculate the operating working capital ratio? I have already explained to you. So inventories plus accounts receivables minus the account payable, and what we get in the bottom is the operating working capital. Now, operating working capital initiatives